The sentiment around altcoins is extremely negative. Most people have completely stopped trading them altogether, and potentially for good reason. Bitcoin is outperforming everything else. But is this potentially an opportunity to be contrarian? To buy when nobody is buying, to buy things when they are cheap. What we're seeing over here is a comparison of Bitcoin in orange versus Ethereum in blue versus the altcoin market in green. And clearly things tend to go in similar directions at the same time. Either the market is expanding or it's contracting. And since July of 2017, so over the last 8 years, the altcoins in aggregate made very similar returns to Bitcoin, and Ethereum is actually the underperformer. But what happens when we look more at recent history? So maybe the bottom of the bear market in 2018, when Bitcoin was at $3,500 and we subsequently had our recovery. Had we just bought an equally weighted portfolio of Bitcoin, Ethereum and the altcoins, we would have gotten the same kind of returns. So really it matters what kind of time frame we are looking at. What about the cycle top in 2021? Let's say we bought at that point. How would our end performance look now? The answer is Bitcoin outperformed massively and Ethereum and the altcoins underperformed to similar degrees. Subsequently, we had our bear market, right, where Terra Luna and FTX and Three Arrows Capital, etc. collapsed. Let's say we bought at the bottom over here. Again, Bitcoin outperformed everything else. So it seems as if it's simply an outperformance of Bitcoin. It's not necessarily particularly just an underperformance of the altcoins, because Ethereum performed similarly, at least over that cycle. But once we dive a bit more into the details, we do find interesting patterns. There is this idea of the dominance metric, right? We look at how much of all of cryptocurrency is currently in Bitcoin or in Ethereum or in the altcoins. And we can have a look at this over time. And we find interesting trading ranges. This is Bitcoin dominance. And historically, it tended to go down very sharply when it hit roughly 73%. So when 73% of all of crypto was Bitcoin, that was the potential mark for an altcoin season. Because when Bitcoin dominance is crashing, it means that Ethereum and the altcoins are doing very well. Here is the Ethereum dominance. Again, we've got a trading range. Interestingly enough, we have already bounced off the bottom of that trading range. So in September of 2019, we hit roughly 7% in Ethereum dominance, and we also did so in April of this year. I don't think it's a coincidence that we saw this rally in Ethereum in the last few weeks. Now, if we think that the Bitcoin dominance has a high likelihood of continuing to go up, and at the same time, Ethereum dominance has already bounced from its bottom and is likely also going to go up, then there's only one part that can go down here, and that's the others dominance. It's the dominance of the altcoins that are not in the top 10. And that's what this chart is showing. Initially, we had quite a bit of adoption of the altcoins. So this bottomed at 0.5% of all of crypto being in the alts, and it topped at roughly 19%. And there was adoption, as in this line tended to go up, but now that adoption curve seems to have broken. We are going below a support. And again, when Bitcoin dominance goes all the way up to 73K, and when Ethereum dominance also rather goes up than down from here, then likely that's the conclusion out of the first two statements. The altcoins will further bleed. Now, I'm painting here with a very broad brush. I'm simply just stating the altcoins are going down. I'm not talking about decentralized finance. I'm not talking about crypto gaming. I'm not talking about meme coins. It seems like over time, there's always one category that tends to do quite well, while the rest doesn't do that well. But in general, the picture is clear. This is the small altcoins, the altcoins between crypto rank 900 to 1000, their performance in the last year, while Bitcoin went up roughly 70%, right? But the vast majority of those altcoins went down. We can also go up one crypto category, right? We can go to the 800 to 900. Again, the vast majority is down. We can go even further. Again, there are a few outliers, but the odds are definitely against us. Most altcoins go down most of the time. In fact, in the last 3.5 years, the others market cap versus the Bitcoin market cap fell by 78%. 5%. Had you invested in Bitcoin instead of a broadly diversified portfolio of altcoins, you'd be up more than 4x relatively speaking. Now maybe you had been around already in 2021 and 2022, right? When we had our DeFi summer and subsequently the Terra Luna collapse, where then also FTX went belly up. There was huge disappointment in the market, not just because DeFi as a whole went down, but because the fundamental mechanics of decentralized finance got put into question, because a lot of projects were simply masked Ponzi schemes. There was so much token inflation. For example, here, Olympus DAO, that token went from over $1,000 to now $20. Or here, Tomb Finance, it went from $3.55 to now 0.2 cents, a drop of 99.91%. Here, this is even worse. This is Tomb shares. One poor soul bought this close to $20,000. Now it's only $10, a drop of 99.92%. So there were the flat out Ponzi schemes that just collapsed. There were also decentralized finance protocols that simply went down very long term over time because of the token inflation. People have learned that over time, the early investors cash out, the insiders cash out, the team cashes out. And that causes long-term underperformance of most decentralized finance protocols. Interestingly enough, after the market has collapsed in decentralized finance, we got websites that estimate the selling pressure that happens in the DeFi market. Because of the constant sell pressure, because of those unlocks, the vesting unlocks, because of all of those people that dump tokens on the market with that additional supply, we need to have at least the same amount of demand to just keep prices stable. And have a look at this. This is Tokenomics.ai. And this shows us the linear value unlocks. This now for individual weeks, and it's roughly at 350 million every single week. So if there's less than 350 million of demand for the altcoins in aggregate, the altcoins are going down. Now this is just the linear unlocks. If we also take the cliff unlocks into consideration, we add it all up, we are closer to 600 to 700 million every single week. And so this is then competing with Bitcoin and Ethereum. Now, Bitcoin also has an expanding supply, right? There is miners that get new Bitcoin every day. How much selling pressure do we have from Bitcoin? We've got a market cap of 2.1 trillion. We've got an inflation rate of 0.85% per annum. Thus, selling pressure of 50 million per day or 350 million per week. So Bitcoin has half the selling pressure that the altcoin market has. And then we've got all of that Wall Street demand, right? Through the ETFs or through the Bitcoin treasury companies that support the price, that actually buy up Bitcoin faster than it's getting issued. And we don't have the same kind of demand for the altcoins. And that's what's causing the long-term underperformance. That's why I think we will continue to see the altcoins underperforming Bitcoin. The Bitcoin dominance will keep rising, the Ethereum dominance will likely go up as well. But really, the altcoins are fundamentally screwed, just the way they are set up. And so people started to understand how unfair of a game that is, how the team is cashing in all the gains and how the retail investor is left holding the bag. Thus, the market still wanted to speculate, but wanted to do this without all of that token inflation. The token inflation became evil. And if we are speculating anyways, and most of those crypto projects are just hot air, we might as well cut out all of that token inflation and instead have a fair player versus player game. This is why the meme coins got that much adoption. Just have a look at the pump.fun ecosystem on Solana. So this is a launchpad of meme coins on the Solana chain. And there was very nice growth, very nice adoption. But something has flipped. Have a look at the pump.fun ecosystem as a share of all of transactions on Solana. This is now declining. We had the height of meme coin trading in November of 2024, and now meme coins shrink in their relevance. Yes, tokens on pump.fun are fairly launched. There is no token inflation. But what means fair, right? It's still the insiders that get the tokens extremely cheaply and that then sell off over time. So it's again, very few people that make money with meme coin trading. Capital concentrates in the hands of a few people. The vast majority is losing money. And once you've lost money with meme coins, you will stop at some point. And that's why those kind of markets cool off after a while. First, there is some excitement investment. First, there's some growth. And once everybody has burned most of the crypto portfolio, that's then when we see the market collapsing again. Have a look at this. In the last year, Bitcoin went up by more than 70%, roughly 75%. But in the same time period, most altcoins, especially the smaller ones, tended to go down. So how many of those smaller altcoins actually made those 75%? It's 1, 2, 3, 4, 5. We've got 5 outperformers and 95 underperformers. And I think this is an opportunity. Most altcoins underperform Bitcoin most of the time because of token inflation. The team tends to cash out over time. Early investors tend to cash out over time. There is a growing supply with all of those vesting unlocks, and that then leads to long-term underperformance of most altcoins. And so that's how I'm currently making most of my money. This is how the community is currently making most of its money. So this is a chat where our members share their wins. We are betting on weak altcoins and we manage our risk, of course, in the process to outperform buying and holding Bitcoin. I've actually measured this for my own portfolio for the last 4 years. Had I just dollar cost averaged into Bitcoin, I would have gotten this light gray line in return. Instead, I got the black line because, again, I shorted weak altcoins at the same time. Very inflationary altcoins where early investors cash out. And when they are cashing out, we are making money as well. A lot of this extra performance was because of Balancer. So that was one of my favorite trades. This is Balancer relative to Ethereum, just long-term underperformance with very little volatility. And so I just flipped this around and I got this performance instead. We go long Ethereum, we go short Balancer. And when we do these kind of positions for 4, 5, 6 different altcoins, and we manage the risk properly, we can have nice long-term outperformance without having to rely on the next 10 or 100x altcoin, right? We don't have to find the needle in the haystack. We don't have to figure out what's the next Kipchi or the next Aki or the next ZKML. We can just turn this chart around and everything that's red becomes green and everything that becomes green becomes red, but it's fine, right? We just have to avoid the assets with too much attention. Now, of course, I'm also making dedicated videos for all the premium members. Every 3 to 4 days, I publish a premium update videos where we discuss the positions we've got open, where we also discuss the general macro environment. There are many tutorial videos as well. And if you've got the time, you can just binge watch them and improve your crypto game long term. But in the end, really what matters are only 2 main videos right now. And that's how to bet on relative valuations and how to manage risk when doing that. Because that's the downfall of many beginners. They see suddenly my win rate is high, I'm winning in 70 or 80% of my trades, and so I can just increase my leverage, I can just be a bit more loose on the stop losses, etc. And then the few bets where it doesn't play out, where we actually have a green bubble over here and we bet on falling prices, those few bets then destroy the entire portfolio. So risk management is incredibly important. If you're winning 80% of the time, but in the other 20% you're losing everything, you haven't won at all. It's not a sexy topic, but please, before you start doing any of this, watch this video first. Risk management with relative valuation bets. It's 28 minutes. So feel free to join us. It's currently $125 per month. If you sign up for the yearly subscription, we can also have a one-on-one talk. So in case you want to discuss your entire portfolio, crypto, but also outside of crypto, then we can do this for 60 minutes in Zoom. We just then schedule an appointment. So that's over here. Right, you're just toggling, you get to the yearly subscription. You're also saving $250 in the process. A link to the premium website should appear directly here on screen. Just click on that, it will lead you to the website. If it's your very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.